This is Justin AMZN for Friday, February 26th, 2021. I drew in a couple of curves here on the 31.25 call and a couple curves here on the 30.75 put, and they match up with a few other places on the stock. And so what I noticed here is we put in a really nice Morningstar reversal right off of the red line here, and then put in another Morningstar reversal off the 21, put in an evening star reversal up here at the high of the day, didn't know it was going to be the high of the day, but then put in another evening star reversal here, retesting back up, but didn't quite get that high. Really pretty much came right back into the high near the open. So what does this mean? On the stock, it doesn't really look like that much. Maybe this would be kind of a double top here between these two. But looking at the options, this is definitely a double bottom here to here. And the price came down to the same level. So you could have been getting in 2 by 1. So that's getting in at $2, the stop down at 1, so $100 risk, and setting your target on a Friday to 8R. So 2 plus 8 is 10, and it would have actually filled. And you could have gotten in off of the red line, buying it at $2 here, or even waiting till it came back into the 21 after it moved up, came back down, because it's moving on a Friday. So you would have had to hold through, a 2R gain and then giving it all back, and you're back to break even, and or it could have been getting in right here at the $2 price, and it would have filled. Didn't come down to $1 until we're much later in the day here. Also later in the day, we're breaking down below 2, making new lows in the day, and what's really interesting what happened today is even though the call was breaking down, the stock actually did recover. And I mean, the option did come back up, but you really could have done like an absolute zero anywhere in here and really just doubled your money. Doubled your risk. Let's say that, not doubled your money, doubled your risk later in the day. Could have been buying absolute zero. So you're buying at 1 with a stop at 0, $100 risk, and you set your target at 2, and it would have filled in the last 15 minutes of the day, but still would have filled. All right, so let's look at the put. Similar to what happened with the call, it came down to, let's see, a $3 price. So didn't quite get down to $2, but came down to $3, and really didn't. Let's see. No, the scale is way off. Scale is way off because this option was over 40 bucks earlier. So let's see. So bought at 3 here, not knowing this is the high day, probably wouldn't have happened, but it came back down to the $3 price. Buying at 3 by 2. The low was 265. Yep, so that would have worked. Even this candle, no, it came down to 375. So buying here at 3, again, for Friday, set your target to 8R. So 3 plus 8 is 11. And that would have filled on this candle right here. So that would have been right here. So going bearish would have hit your target here, which is nice because that's actually just above where it had reversed earlier, and it reversed off that same level. And let's see, where would this have filled? That was this. Yeah, that was the high here. So possibly would have been taking off some gains near the previous high of the day on this candle. That would have been this candle, maybe getting out at like 8, probably 8. So that would have only been like a 6R gain, or getting that stop tightened up so you're not giving back too much. But I mean, that's a really nice candle on the option, and I guess it had a little more strength to it. It had a almost shaved top, high, and the close are the same. Yeah, that looks like it could have pushed up a little bit more. Like, not if you didn't know the rest of the day here, seeing that candle, it's like, okay, there's some bullishness still in that candle, high volume, shaved top, so probably would have held on and gotten out at the original target of 8R, which would have been a target at 10. So looking hindsight, obviously, it's much easier to figure out, oh, I should have done that during the day. But really nice seeing some setups with the options being double bottoms on both a call and a put. What I usually like to do on Friday is end up with the same strike. And that just really did not seem reasonable today or Friday because there was still so much premium and the prices were moving around so much. So if we do end up taking a look at the same strike, the middle strike between these two would have been the 31, oops, meant to type 3100 call. And we'll zoom in like I usually do on this one. And the 3100 put. Again, just going right in the middle of the two strikes I had up. And let's see what happened on these. So again, the price is just that much higher on these. Even when it pulled into this low, the range on this one was more than $1. The range over here was still more than $1, $1.60 on this candle. Didn't have the same price. So this was a higher low, clearly, and it matched up with this being a higher low. And then similar here, you actually had some smaller candles. The range on these were still more than $1. Range on this was 176, 120. That was pretty good. This candle, the range was 171. But the price, let's see, it came down to 750, came down to 599. So you didn't get the same level that it came, for it to come back to. If you had been looking for an entry like at 8 over here, to be comfortable, like 8 by 550 or 8 by 5 was the setup over here. That's a $3 risk, and I'm talking about $100 risk. So you're buying at 8 with a stop down at 5, a protective stop at 5. That's $300. So would not have been able to do that with a $100 risk. Even over here, if you were looking to get an 8, I mean, you wouldn't have just set up the stop at 7, because 7 wasn't really a good value that it held. It came down to 695 here, so at least getting below that candle. And it's just really hard to see where, see these ranges. I mean, I can zoom in on this and you can see the candles a little better, but it's just harder to do on options that move so much within a Friday. And so if you go a little further out in each, go a little further out of the money with the call, a little further out of the money with the put, you start to see some options that move a little cleaner, have that range that's a little closer to $100 on the candles or a little under $100. And even though you're further out of the money, there's still some significant movement. I like sticking with the ones that end in 0, 25, 50, 75. Those are usually the cleanest ones. They have the highest volume that I've noticed on a Friday. Really, though, anything can really work, as long as you're probably under 50 points away from the strike. So like when it was down here, I was talking about the 31.25 and what that option would have done. So that was getting in over here or over here in a pullback. On that pullback, it was still at, like 30.70. So you're still 55 points out of the money on the same day that it expires like 4 hours later. There's definitely some risk to that. So if you can limit that risk by getting into a less expensive option, something that's only worth $2 at that point, rather than something that's worth like $6 here, or $7, it has further, this one has further to pull back. It's more likely that it could even just have that wick down, wick lower. Even if this candle didn't go up and went down and wicked a little bit lower, probably would have been wicked out of that trade, would have come down to $5. You would have been stopped out, and then it would have ran without you. And that's just no fun. I've been in plenty of those. So just going out another strike, but also going out another strike or another, from zeros to 25 to 7 to 50 to 75, and a move like that, you can watch how the option moves. If the option's coming back, the option's trying to go to 0 because it's out of the money, you can have that more explosive move. You can have it move with in the direction you want to go much faster. Yeah. So don't really see as clean of a double bottom here. I mean, this is still a double bottom, and then you still have like a neckline retest, but even the retest here, this is coming into like a $10 price. There was a much wider range here. You don't really have a clean price to be buying this way up here. Sure, it had a great move, but really what was your setup looking at it ahead of time that you could have been getting into that? This candle didn't come into the 21. I like following the 21. Sure, you can follow the 5 through here. The 5 is usually following like a faster move. Today was a slower day. It moves slower. Like if we compare it to this, you cleanly have a 5, kind of holding down the candles until you get really to this candle. all the while here, we were staying below the 5. We didn't really have a clean move like that. Sure, we got underneath it here, but then we pulled back through it. And then on its way up, it looks like we did that, but this candle pulled through, and we had some wicks through. So, I'm not trying to discount that. But we had a little bit more of a rest. And when it's resting, that's when you're just losing premium in either direction, so it was holding here, and then it continued moving and we lost value. But on the call, we just lost a lot of premium, recovered it, and kept going, through that rest. So again, you want to get a rest that's, smaller candles. So if we get into the 3125 again to see, okay, what was this rest? That's still pretty wide. If you go out further, this is where it gets tough. 3150, that, that had a move, but you're only in, like, you could be buying 2x1 or looking for a little bit of pullback. Maybe you're buying right in the middle of this 150 by 50. You're not going to have enough of a move after that to set, a target out to 8R. It's just not going to work. You can scalp some of this, so if you want to get in 150 and a stop at 50, and you get out at 250 or maybe 3 to double the option, you just look to the left and see, okay, was it in that range? Could it get up this high again? If you see some strong candle, I mean, this had a bunch of lower wicks that it ran into that same kind of price. The open was up here, didn't quite make it back up to the open. So 3150, it would have been harder to trade that. 3140 had some volume, died off later in the day, but probably could have bought like at 2 with a stop it down at 1. Now you would have been risking that it pulled down and back into these candles here, but you get a little bit more of a move. So look through these candles and look, go every 5. So go down to 35, go down to 30. Go down to 25, and just kind of look at how these move. 20, 15, 10. I'm not going through all of them, but that's some of what you need to do to just get familiar with how the options move on a Friday in both directions. See how, and that's what I've come to. Like 31.25 moved pretty well. It's 25, at the 0, 25, 50, 75, on these targets, or I'm sorry, on these strikes, they just move better throughout the week, I think. Sometimes it's 25 and 75 don't. Sometimes those strikes aren't even available. So go to the next one lower or higher. So like 31.20, if 31.25 is not available, might be good. This is something that I've had to adjust even over the last year, because a year ago, Amazon was trading much lower and it moved different when it was half the price ago. It moved different when it was down in the 1700s than it does way up at the 3300 or 3100s, so that's something I had to adjust to and figure out. It's like, okay, how do I actually follow along with how it moves? And that's really just what I'm trying to do in these videos, is putting that in front of everyone and myself, just to really get a feel for, okay, how is it moving this day in this price range? And these are some of the things that I found. So we'll see where we go from here. This is a really big indecision candle here. We're back up close to 3100, which has been kind of a level of support. I don't know if that's only a retest, then we'll run lower. We've had 3 bearish days in a row. We had 4 bullish days in a row, and then we dropped from there. We've been dropping like a rock. I don't have a problem with it going lower. I think, this was enough of a rest, enough of some indecision here. I do like to see a little bit more of a triangle. So I'm trying to see where that would be from here. And there's a little bit of one. Let me just kind of sketch what I'm seeing just to put it out there. But something like this, and then I don't really have the bottom edge. Like that seems too steep when you draw this in. I would not be surprised if we retested back to like 3180 over the next couple days, something like this, where we come back up a little bit to this, the yellow line from the triangle. If you don't know what the yellow line or this red line are, go back and watch some of the videos recently, because they've really just been guiding the movements. I mean, selling there and buying here worked really well, looking at how it moved. stocks or options. So from here, it seems like we're right in the middle between these two. And so if we go back lower, the next area that we'd be going lower to the red line would be around probably 3,000, 30. So anywhere from like 30.25 to like 3,000. We could easily continue just riding this line down. At some point, I think we'll get back up to the L line, but I don't know if we'll go there first or not. Yeah, I don't know. We're just gonna have to wait and see. But the lines are here, and they can be helpful. So the other thing that I'll kind of draw in is I'm just gonna draw it like this. Is this? Oops. Let's see if I can draw a little straighter. That looks a little cleaner. So does that, and we just broke down earlier. I don't know that we're going to come back to that apex like 3150 or come back up to like 3180. But that's, you know, if this is the triangle from here to here that we got some resting, this is really enough of a rest here to just continue lower. So that's a possibility too. So anyway, hope this helps. This is Justin AMZN. Thanks.